Welcome to the first ever market wrap or counting your chips here at Trade with John. And today we really do have chips to count, because if you were following me on Twitter, then today you had a good trade and I gave it to you free. It was sell NASDAQ 1734, buy back NASDAQ 100 1716. I gave it to you and it hit and it was a winner and you had plenty of time. It was actionable. I hope you did it. I hope you made money. If not, better luck next time. Let's get to the market and what happened today. Today you had the Dow, which was up 14 points. This masked overall weakness in the market itself. You actually had the S&Ps, a better gauge of the overall market, down 3.5. You had the NASDAQ and the tech-heavy NASDAQ showing a rather serious loss of 24 points. So the NASDAQ was a big loser on the day at about 1.3%. The NASDAQ traded 6% above its 3-month moving average on volume. Its losers beat gainers at 1.6 to 1, same as on the NYSE, 1.6 to 1. And its volume on the NYSE was 17% above its 3 months average. Before the market, you had the Red Book retail sales. They came out, pretty good, up about 0.8 year over year and 1.6 month over month. These are good numbers, not bad. The market was trading flat to slightly up at that time, following the European market up. And just before the Case-Shiller, it was again trading about flat to slightly up. Case-Shiller came out slightly above. For those who don't know, Case-Shiller is the housing price index of the 20 metropolitan areas. That came out strong. We traded up a little bit there. And then what tanked the market early morning was consumer confidence. Anybody who's been listening to me knows that there's three questionable areas of the bull scenario. It's consumer confidence, it is the housing price index, and unemployment. Well, today you had the good news, but it was slightly above expectations of the Case-Shiller, and then undercutting that right away was the consumer confidence. Came in at 47 instead of 53. This is a big drop, and it's been dropping a bit by bit over the last couple months. This is a really worrying sign. When you have the stock market, quote, the gauge for consumer confidence, some people believe, going up, and yet the overall survey of consumer confidence going down, that type of disengagement can't really take place for too long, and it more or less makes one of the two suspect. And in this case, given what we've been through for the last several months and the high unemployment and some other questionable areas, it makes the stock market rally a little suspect, and this is why a lot of people sold into that at that point. Also out today, we had an interview with JP Morgan's Jamie Dimon. He said that he sees 10% unemployment over maybe in the next month, and over the next 6 months, he thinks we'll be in the 10 handle there. Currently, not there yet. He says he no longer sees any chance whatsoever. He's assessing the probabilities near zero of any type of market Armageddon anymore. He says the financial flows for capital are flowing in a bona fide manner, and if you're a good customer, you can get capital now from a bank, and banks are back to being capitalized. This was good for the financial sector to hear that, although the financials, in fact, traded off today just a little bit, down 0.5%. Not too bad, but they did trade down just the same. Also out today, kind of undermining the Shiller Index, was Robert Shiller himself, who did an interview with the Wall Street Journal today, and at 1:30 came across the wires, and he said that he didn't think the gains in housing prices were sustainable. And this reverses what he said just a month ago at the end of September. He said that he thought housing had bottomed and we would see sustainable gains. So this is a reversal of his position on a day when we saw some housing appreciation in his index. The market didn't really react to this news, and it wasn't widely disseminated, but it's something to keep in mind just the same. After the market, we did see Visa come out with better earnings. We also saw Cephalon come out with better earnings. RFMD Micro Devices come out with better earnings. We saw Norfolk Southern come out with slightly better earnings. Not a strong report, though. We also had distillates come out and crude. There was a draw where we thought there'd be a little bit of gain in the crude inventories. Gasoline had less of a draw than we expected. Overall, again, we saw broad weakness across. This is the third day in a row we've seen selling in the weakness, selling in the broader markets. Also during the day, we saw Bill Gross come out, and he had an interview on CNBC. I would say he was a little bit dire. He wasn't really all that upbeat. But what he did say was about economic policy or Fed policy. He made the comment that he thinks that we will have to see GDP growth of 4% sustained for a minimum of 12 to 18 months before the Fed will abandon what he calls the zero interest rate policy, much the way Japan's been on its zero interest rate policy for quite some time. He says we're going to have to see it, which makes us essentially what used to be called the yen carry trade. Now, the United States, we're the dollar carry trade, which means that people will borrow as our Fed subsidizes the borrowing by having a zero cost to taking dollars from them. They'll take those dollars, they'll deposit them in overseas accounts where there are higher interest rates. This is part of the reasons you're seeing an inverse correlation between our equity markets and the dollar. And part of that is the hedging that has to take place and what's called a convexity trade against that dollar carry trade. When people are taking it on and making adjustments, you're seeing an inverse relationship between the dollar and the equities, the same way we saw for Japan since the late 1990s when we had the yen carry trade, when they were the ones carrying the world in terms of sending yen throughout and printing presses and things of that nature. Now we're the ones doing it, and that's why our dollar and our equity markets have become somewhat inversely related. This was the first market wrap. I hope you were able to benefit from my call midday about selling the NASDAQ, an 18-point move. It's the first call I made publicly. It was a freebie, and I hope you enjoyed it. It was on Twitter for those of you following me on Twitter. And this is our first market wrap. We'll be coming to you every day. Again, this is an always free and always will remain free service, and I hope you enjoy it. Thank you, and happy trading.